Hey everyone, welcome back to the Financial Wrap. I'm really excited about today's episode. It's going to be a special one. It's something I've been thinking about for a while now. It's been on my mind. And kind of with this just new format for the podcast, I thought it'd be cool to just do an episode like this and kind of change up from what I usually talk about. I feel like I'm normally talking about a lot of current events, what's going on right now, a lot of stock analysis and things like that, but I think it's important to kind of talk about the roots of why this kind of stuff is important, why finance is important, why investing is important. I have two younger siblings. They're a little bit younger than me. They're in college, getting ready to graduate, stuff like that. And they're getting ready to go make their, real money in the world. And I've talked to them trying to get them to kind of understand investing and invest for themselves and just learn, because they don't know anything, and it's really hard because they don't understand. They were never taught how to manage their own personal finances, and that's not their fault. I feel like we do a really bad job in this country. I live in the United States of, teaching personal finance and investing, and they don't even know how stock markets work. They don't understand why a stock price goes up or down, or what a stock even is and what it represents. And so it just really reminded me about why this is needed so much, kind of motivated me to start doing these podcast episodes again because it's something that's really needed. Most people don't understand how this works. And so I kind of just wanted to give my thoughts on why investing is important. So I won't waste any more time. I'll go ahead and get into it. But, at the end of the day, we live in a financial regime right now where the money itself, the capital that we hold, so the US dollar, or whatever currency, whatever country you lived in, it's not backed by anything of real value. You can't exchange it for a certain amount of gold or a certain amount of some other type of precious metal or commodity. There is no value to the currency itself other than the government says this is the currency that we use here to exchange with each other for goods and services. That's it. And the military, of course. But basically, it's the government backing the currency. There's no other real financial or value coming out of that currency. There's no value. When you pair that idea with the inflation that comes with living with a fiat currency, so the target for us in the US is 2%, and it's different targets throughout the world. That's kind of just an arbitrary number in general. It doesn't mean anything. There's no threshold of what happens to the economy if you're above or below 2%. It's kind of just this target because there will be inflation in a credit-driven economy, in a fractional bank reserve economy, because money just gets printed out of thin air all the time. And so when you have inflation and you have a currency that has no real value, once you realize that, you come to this realization. It's like, okay, so what I need to own things that actually have value then. I need to own things that have value other than what am I working for? I'm working to get these dollars, these units of value of measure, but they don't actually represent anything. They're just used to buy and sell stuff right now. So I need to go actually buy something that has value and generates value. And so that's kind of why investing is important, because we forget why we work. Like, we work to get money, but like, what if we had enough money to live the lives that we wanted to live? Would we be working? Probably not. You probably wouldn't get up early in the morning and go to whatever job you're working if you already had $10 million or however much it would take for you to be able to retire for the rest of your life. So if I do have to go to work and I'm making these units of measure, I shouldn't just spend them all. I should save some of them, buy assets so that one day I don't have to work and I can live life the way I want to live it. Whatever that means for you. So that's why investing is important, because even if you wanted to work your whole life, which 99.9999% of people listening to this probably don't want to work until they die, but even if you did, you probably won't be able to. If you're lucky enough to die of natural causes, eventually you won't be able to work anymore. And who knows, maybe in 50 years we'll have developed artificial intelligence to the point where all of our tasks, quote unquote, are being done automatically. And innovation is being driven by a mix of people and AI. Maybe we don't have jobs the way we think of them now. So you can't rely on that. You also can't rely on a government to support you, something like Social Security. You really need to take control of your own financial situation and start buying assets that return value to you without you having to go out and manually work for it. So that's why it's important. But even if you understand that concept, you can still be like maybe my siblings and be like, okay, well, I don't understand how the stock market works. It just seems like a big gambling machine where I put money in and maybe I get more out, but maybe I don't get anything back either. And that's a fair question. If you have no idea how the stock market works, well, then why would I want to invest in stocks? And so the way the stock market works is, I know a lot of people who watch this or listen to this will know how the stock market works, but maybe there are people who don't. The way the stock market works is I can buy a share in a company. So I can buy a piece of a company. I'm now a part owner of the cash flows that this generates, positive or negative, this company. And so if the company makes a lot of money, they make a profit, they can return that capital can be returned to me in one of three main ways. The first is being a dividend. So the company can pay out a certain amount per share. Say they pay out $1 per share. If I own 10 shares and they paid out that dividend from the profits that they earned, then I'll make $10 from the shares that I own. That's one way you can get paid from the stock market. Another way is from the stock price just moving up or down. So if a company makes a bigger profit than was expected or they did the year before, then the price of that company is going to go up. People are going to be willing to pay more money for a share in that company because the profits are higher. And so if I bought the company for $10 a share, I spent $100 because I got 10 shares at $10, and now it's worth $12. Well, I just made $20 because every single one of my 10 shares just went up $2 in value, and if I wanted to sell them, I'd make $20 off of it because I would have made a $2 profit per share. And that's another way that value can be driven back to the shareholder once you buy a stock. The last main way that the company can return value to the shareholders through a stock buyback. So if a company is fairly valued or below its fair value from what the company believes, and they made a big profit off of whatever they do. So if I'm Apple and we sold a lot more iPhones this year than we thought we were going to sell, and we made a big profit, we can buy back some of our stock. So the shares trade on the open market. They go and they buy that stock from people who are willing to sell their Apple shares. There's now less shares on the market. So if the company is still worth however much it was worth before they bought the shares back, and now there's less shares to represent that value, the value of the shares will go up. So say I own 10 shares of Apple and they bought back a lot of their shares. I still own 10 shares, but those 10 shares represent a bigger piece of the company now. So the stock price goes up, and if I sell, then that capital's been returned to me. And so those are the three main ways you can make money off of owning an individual stock, a company. So my siblings might say, oh, that's great. I understand how I can make money, but I don't know how to analyze a company or a stock. I don't know how to pick good companies. So why would I invest in stocks if I might not pick good companies? I might not pick companies that are profitable or that can grow their revenues or their profits over time. That's also a fair assessment and a fair question to ask. And that's why for most people, buying an index fund, which is a collection of stocks, is the way to go. And if you just buy the S&P 500 or a global market index, you might never need to sell that for the rest of your life because the companies in that index will change over time depending on who's performing well and who's not. So you don't even have to make an assessment and sell or buy, because the fund is already doing that for you passively. For example, the S&P 500 is a collection of about 500 companies in the United States that are publicly listed. It's the 500 largest publicly listed companies that also have to meet a certain set of criteria that's the Standard & Poor's index sets, like measures of profitability and cash flows and things like that. So if a company becomes unprofitable over time, they'll automatically get churned out of the S&P 500 index. You'll no longer be invested in it. And furthermore, if that company went to zero, it only makes up a little tiny portion of that index because there's 500 companies. So you have that protection of the diversity of companies, but also that it'll adjust over time to who's performing and who's not. So you can buy an index of all these companies, and whoever is making the most money will be weighted the most in the index naturally, and that's who you'll be invested in over time. And I think that's a good way to go. I think once people understand that and understand that, the price of that fund or a stock, if you choose to invest in an individual company, it'll fluctuate over time, up and down, but on average, it'll go up over time. There's never been a 20-year period in the United States stock market where the market was not higher than it was 20 years prior. So if you're invested for the long term, history says that you will make money. And that's one of the only ways that you can kind of beat inflation, is to invest in something. The most reliable thing that history tells us is the equity markets. It's risky, but you'll get the biggest return, and over a long time horizon, it will go up. Another kind of, and this is like a philosophical argument to investing, is we've structured our society to where the capital markets represent human development and advancement. So like, as we work every day and advance society and make things more efficient and better and more just better for everybody, that gets reflected in the markets. And so if you don't own a piece of the markets, then you're not really profiting, taking advantage, really enjoying the ride up in just human advancement in general. So that's kind of like another reason, I guess, to invest, is like, you want to take advantage of our advancement as a society, as a culture, as the human race. And that's one of the best ways that you can do that, is in the stock market, honestly. That's how we raise money for big ideas. And I don't know, it's just, people get mad at people that just like invest money, and like that's how their family made a lot of their money, is through investments. But you could combat that by saying like they funded some of the biggest ideas, or helped fund some of the biggest ideas in history. I don't know. It's a way for people to find things they believe in, fund them, and then profit off of it, helping humanity or bringing value to society. And I think that that's pretty cool. So that's another reason why I think investing is important. And once you understand those basic principles, I think it becomes a lot more easy to invest or be comfortable with putting your capital to work, because you don't just want dollars sitting around. Especially, I mean, in an environment like right now where there are real interest rates, you could make an argument to where holding cash is worth it. But we've been in an environment for so long where there hasn't been any kind of real interest rate. And so if you have cash saved, and it's not, an emergency fund or for an expense or for something that you're saving up to buy in the near term, you're kind of wasting the value of that money. It's getting inflated away. You're not going to be able to buy the same thing with it in 5 to 10 years that you would right now. And so I just think that once people understand that we live in an inflationary environment and they understand how the stock market works or just markets in general, because there are lots of other markets to invest in besides just the stock market, that's just the biggest one, then they kind of wrap their head around these ideas, then it becomes a lot easier. And I think it's important for people because if, even if you're not interested in finance, but you passively invest your entire life, you can be immensely more wealthy. You can retire earlier. You can pass down wealth to your family, and that's real value. That's more valuable than, I don't know, making a lot of money when you're in your peak working years, spending it all, not investing anything, and then your family's just back to square one. Your kids got to go back to work. They got to grind for 30, 40 years for any real wealth to be built. Like, I don't know, the goal is bigger than just working, making money, and then dying. It's about building something for your family at the end of the day. You look at all the most wealthy people in the world, they set up these trusts and these funds, and the ability for them to keep that wealth preserved over many generations and keep that freedom, really, the freedom to do what they want. If you got to wake up and go to work every day, you don't have a choice. You have to deal with a boss. You don't have a choice because you need that job. I mean, what makes you different than a slave? You can't go on vacation because you don't have enough PTO. What kind of life are you really living? You're just a slave. And that's what most people in the world are. We're just slaves to these giant corporations. Um, and maybe there won't be as many wage slaves in the world if their families had understood about investing generations before that. I think we're living in an era where it's a lot easier, a lot more access to technology, a lot more access to investing in itself in general, but we got to take advantage of it now because we have an opportunity to do something pretty special for ourselves if we do invest over the long term, and especially if you start early. People say, well, I want to wait till I'm making real money to start investing. Well, that's not the right idea. You should be buying assets always, even, you know. I started investing. I'm not saying this to like toot my own horn. I'm just using it as an example. But I started investing as soon as I graduated high school. I tried to start investing actually before that. I tried to download this app called Acorns. You might know what it is. When I was like a junior or senior in high school. Because I did understand this idea of like inflation, and I don't want to just hold on to dollars. Like that's not a path to wealth. I need to buy assets. I understood that, but I didn't really get a lot of other things. Um, and I wanted to download Acorns. At the time, I had to get permission from my parents to download this type of an app on my phone. They thought that it was like, maybe this is like a Ponzi scheme. They didn't really understand like the stock market or investing or anything like that. They're like, no, 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 you can't download this. So didn't start investing then. I don't think it would have made a huge difference. I mean, it definitely would have made a little bit of a difference, and it would have accelerated my knowledge in the investing space. But after I graduated high school, I downloaded Robinhood, which I no longer use as a medium for my investing, but downloaded Robinhood, and I just started putting portions of my savings in there, buying individual stocks. I didn't even really know what an index fund was, but I did make money off of those investments as a whole. And, I have more, my portfolio is worth a lot more now than it would have been if I didn't start then. My knowledge is a lot more advanced now than it was if I didn't start then. I made a lot of mistakes then that I'm glad I made then when I had a lot less in my portfolio than I do now, because I would not want to be making those mistakes right now. And so the earlier you start, the better. Because some things you won't learn or understand until you do it. Or there's some things that like you'll be advised against and you'll be like, yeah, that makes sense, but I think I'm still going to do it. And then you do it and you make the mistake and you're like, oh, that's why. And so I think the earlier you start, the better. Again, I apologize. This episode's kind of just been like completely wherever my mind is going. I did not write out any kind of outline for this episode, just kind of rambling and letting my mind wander. But I think, maybe it's a good change of pace. This is a topic I like to talk about, as you can tell probably. So, yeah, the earlier you can start, the better. I'm a proponent of Bitcoin as an alternative route of investing. For other reasons, I'm sure I'll do an episode on Bitcoin specifically in the future, but I see Bitcoin as a true store of value. Um, if you want to call it a currency or not, I don't know, but it's to me one of the most valuable assets in the world. Um, if not the universe, you know, if there were other civilizations that we could somehow trade with, Bitcoin could be an asset that could be used to trade, I think. I mean, we're so not there, but if you wanted to scale it up that big, that's how big I see Bitcoin, I guess is what I'm trying to say. That's how big I see it. It's a universal thing for me. I think it's one of the most ingenious creations ever, one of the most important pieces of technology in human history, in my opinion. Not everyone shares that opinion. That's okay. But so I invest there as well. But as far as like cash goes in my own personal investing, I have an emergency fund. I have a fund that I use to save for like real estate down payments and like buying a new property. And other than that, I just have money saved for my liquid expenses, um, the things that I have to pay that month, and that's about it. I have a little savings account for like discretionary things and like sinking funds for discretionary spending or unexpected expenses. I have like a two-layered emergency savings. So like I have a main cash reserve, like emergency savings, whatever, that could be used for a variety of reasons, which is why I just like call it the cash reserve, and that's invested completely in money market funds. But then I have like an unexpected expenses fund, which is like the first line of defense for the emergency savings, like if there's an emergency expense. And that's in an FDIC insured savings, high yield savings account, which yields a little bit lower than the money market fund, but it's still over 4% right now, which is good. It's like 4.5% and 4.5%. And so that's the only cash I have. So other than that, I don't really want to hold U.S. dollars. Like, what value is that giving me? There's no real value. I want to buy assets. So I'm saving up to buy real estate. I own Bitcoin. I own stocks. Um, I would like to get into some other alternative investments in the future. I think I need to grow my portfolio to a larger amount before I do that, but I'd be interested in things like gold for an alternative investment. Um, I don't know. I go back and forth on gold, but I'd be interested in gold. It's something I could see myself investing in. And then I think art is pretty cool, like paintings, like as an investment, things like that, like wine, watches. Like I think like that would be cool to like collect as like investments and just enjoy in life. Because I think those are things that you can just like actually enjoy in life more than you can enjoy. Like you can't enjoy a stock. Like I can't look at a stock on a wall and like admire its beauty or like wear it on my wrist or drink it if I choose to. Like so I think those types of investments would be something I'd be really interested in once I'm like financially free and it makes sense to diversify into other asset classes because I don't know. That stuff is like just things that I can actually enjoy in life, but also it's an investment. I just like to invest in general. It's like I don't know, a hobby, but a way to support myself. And so I think that would be cool if I could fuse it with just like enjoying life too. Because I like art, I like painting, but if I could invest in it, that would also be really, really cool. So those are areas I could see myself investing in the future. But investing is personal to your needs, your passions in life. And so that's just another thing that makes it cool is that it's different for everybody. It's personal for everybody. Investing for me, investing for Warren Buffett, investing for the dude that lives next to me, investing for you listening to this. It looks differently for all of us, but it serves the same root purpose of owning things that create value in the world and being free from labor. I think that those are just really big ideas that we don't always think about. So I think I'll stop there before I ramble on too long. I don't even know how long this episode's been going. I'm just sitting in a chair with my mic, and my laptop is somewhere else with like the stats on it. But I hope you enjoyed this episode. I want to just start doing different types of episodes on here and not be so strict and, I don't know, regimented in what I do and create. I want to just be myself. So I hope you enjoyed it. If you like what you're hearing, make sure to follow the podcast on whatever platform that you're listening to it on, and make sure to leave a review. You can always email me with questions. I'd love to do a Q&A. The email should be linked in the show description. And other than that, I appreciate it. If you're on YouTube, subscribe and follow on the podcast platforms as well. And I will see everybody in the next episode.